put a bit of balance in the conversation, because there's always a concern that part of the damage in these sort of situations is the reaction rather than the actuals. So I kind of thought I'd run through maybe a few things that are happening with my own investments and just observations, but also just maybe just give people a little bit of an opportunity to reflect on some of the things that that may be around that they haven't had a go at yet. And that'll be specific depending on what state people are in, but also talk to just some general housekeeping and maybe take a few positives out of that. So I had kind of 4 steps that I might want to cover. One was just getting a balance because, quite frankly, nobody was really planning on March, April, May being as bad as they have.
No, that's right.
Then really started to get on top of some immediate concerns. One was obviously cash flow, but the other one, which I think is really relevant, is people actually have a look at their strategy again. And really, when I say strategy, I mean assumptions, because we've got new assumptions now. And then the 4th thing was maybe just to talk a little bit about pivot and what pivot might mean if the outcome of those 3 sort of leads you that way. So, getting a balance. And look, apologies. I'm sure you've covered a lot of this with people, listeners or avid listeners, but for me, there's some pretty obvious things that should have happened and that are ongoing, which is the frightening thing that people kind of forget. JobKeeper, obviously, that was sort of rushed through, and it could have been done slightly differently. But the great thing about it was quick. Now we've got JobKeeper extended, which is also pretty good news for everything other than the budget. But I'm finding that I talk to people and they 2 weeks into the end of the month or past the end of the month, and you go, oh, by the way, did you put your forms in? And these are startups really with not a lot of revenue yet, and they haven't put their forms in. And I'm just shocked that they might miss out. So just making sure that you see the opportunities that are new. So in New South Wales, that might be a $3K grant. In other states will be different things, particularly for the Victorians, but making sure that you do the requirements and really get into the detail. A lot of people missed out on JobKeeper for the wrong reasons, and there's the kind of stranger ones there, but people like my hairdresser decided that they weren't eligible, even though they shut for a month and a half. I went and got a haircut today, so trying to keep them in business. But no, people just didn't know. But then in the startup or growth company phase, there was actually a bunch of tests called the alternate tests, and people who had growth turnover declined rapidly after growth became eligible. So there's a whole group of people out there, particularly relevant for your audience, that probably haven't necessarily had the kind of real-time advisory, or that maybe could revisit those things after time. People in construction, for example, are suffering a later downturn and thinking, well, hang on, my turnover's kind of been good this year, but then they're actually finding they can get onto that. So just the awareness of the various state government grants, even local councils, providing support for industry sectors. But one other one there that people are thinking outside of the square that I've really enjoyed in my own investment base is overseas investment. Companies that have got an interest in the US and they're getting support on the US measures and finding, hey, well, actually, I don't need to do a capital raise for another 6 months because I've got the US government helping me here. So, or if you're multi-location, that sort of thing can come into the play. Obviously, we're not talking about upsides, but not having to pay half your rent makes a big difference. So if you're in JobKeeper, you're getting the half rent, and that's been extended with the extension of JobKeeper, which is something that wasn't announced, but if you know about the code, you're looking at that going through to when you run out of JobKeeper. So you start, really kind of feeling a little bit more in control with that extra money and the cash flow boost in the JobKeeper money coming through, the rent going down. That doesn't make up for your client base collapsing, obviously. But some of that may be just deferred purchase rather than actually a lack of demand. And that's really where revisit strategy comes into my mind. Now, I had lots of conversations with people who are actually quite enjoying, post that trauma, they're quite enjoying a revitalisation in part of the business model, and effectively taking advantage of getting rid of a lot of clutter that wasn't working, that they were dragging on because they felt that, we've got to give it a go because they've sort of sunk all this investment into it, or time or energy. And they've actually just taken a step back and gone, look, hang on, I'm not dealing with rubbish. I'm not working with those people who don't perform. I'm going to just get on with the job at hand and really do the stuff that gets me a return or gets me forward in terms of where I need to be. And that, I think, is a shorthand response, and which can be positive. The one thing I'd say though is it should be done within probably the broader strategy and thinking about what's new with the strategy. People hit February, March, and everything changed quickly, and we needed to respond to it. But the deep strategy that had been developed by businesses before that, there were sort of probably knee-jerk reactions around, okay, well, my staff will not come into work and we'll have to work all remotely forever more, or, that's it, we're getting rid of the office or whatever it might be. But in a kind of, a little bit less extreme, kind of smoothed out process, actually revisiting that and going, okay, well, what do my customers need from me? What's driving value? Where are the real benefits that they're looking for? What are my channel partners? How are they going to respond, or what do they need more now than they previously were looking for? And the other one, which seems to be a little bit forgotten, is the competitor response. Because if you sort of tie all those new changes up together and then say, oh yeah, now we're going to build this killer online thing and throw our energy into that, and then don't think about the fact that that's the obvious move for all of your competitors, many of whom might be better resourced, advanced in that position, have a great internal technical abilities, etc. Then what are you doing? You need to find a place where you can win, not where the winners will be, if that's not going to be you. So whether that's a localization strategy, whether that's building in rarity to your particular solution for your customers, or whether it's having a competition on price or time of delivery or some other aspect that customers need, those things should be part of that mix, rather than just running for the same gate that everyone is looking at. And putting that somewhere in the broader context of just cash flow. I deal with a lot of people who've got actual cash flow budgets, but I think that's unusual. Having a cash flow budget these days is sort of, you got one done when you went to the bank, or if you speak to investors, maybe you do that more regularly. But it's amazing the number of actually serious businesses that don't have that. And maybe they can bumble along depending on the personal resources, but I think that's going to become more and more relevant, and just actually making a conscious decision. Are you selling terms of service in terms of to your customers as part of the benefits package? And maybe that's great, because ultimately it's profit as long as you get paid, but you've got to take a credit risk at the same time. And maybe there's some great facilities that you can use to improve your credit checking, or your onboarding of customers, to make sure that they don't expose you to payment risk. So, and In terms of like a general kind of just a broad health check, I think there's a lot to absorb there, and there's certainly a lot that's been going on. It's been a tough time to be an entrepreneur, but if you stayed in all of that context, I think it's important to remember that there's a lot of businesses, really hugely successful businesses, born out of these adversity type of incidents, or born out of what seemed to be a mistake, and then that came good. YouTube was a dating app. Pretty impressive dating app. It was video dating, didn't work. But they're great at video, so they did something else. If you look at Slack, that was a video game with a little chat feature that just happened to be really good for the teams to work, cross jurisdiction. But the actual game that they were developing, nobody really loved. And that's the really exciting component. That's why I think there's huge opportunity here, because it's this level of disruption with ordinary business models really accelerates their appetite to try different things. And
that's right.
That sort of growth and innovation and startup kind of culture and the willingness to take calculated risk really has a magnifying effect. And you're already seeing it in the stock market, where the story stocks and the sort of high potential businesses are really getting blown up in terms of valuation. And with very low interest rates, if you do something really spectacular over the next couple of years, come out into a marketplace that's absolutely begging for what you're doing. There's plenty of reasons to be optimistic in terms of what the potential upside could be. But equally, it's a good time to actually be a realist, an opportunistic realist or an optimistic realist. Because if you're doing something that it really wasn't working before this, and all of the assumptions have changed into a negative proposition for you, then, free up that time and do something else, and tidy it up, move on with grace and poise, and come back when you actually have got some sort of fit or a plan for MVP. So that's a pretty big download. But and you didn't get any questions in. So do you want to flesh out on any of those? Oh, look, there's a couple of other things I'll throw in there.
Yes, throw them.
I'd also have a look at if you are an optimist, and there's really great reasons for you to be an optimist, you're going to be coming to the investment community, which obviously I'm representing that in some capacity, and really finding it hard work. Everyone in that chain, from friends and family, fans, through to crowdfunding, whether it's reward or equity-based, angel investment or venture funds, traditional markets, every part of that has been put under strain. And there's pretty simple reasons for it. If you're into alternative assets, and then they dropped in price because the market, and then the traditional assets dropped in price substantially, which is my personal experience. I feel like, for many years, the stock market priced me out. I just couldn't quite see the value there. But then the market drops by 40%. All of a sudden, what, do I buy that startup, which I'm going to get return for maybe in 8, 10, 12 years? Or do I go into the market and pull out a 20% return in 6 weeks? So, it's a luxury of having a bit of wealth behind you, but it's also, possibly just, that risk tolerance. So you've got a risk tolerant audience that's willing to look at alternatives. They're going to look at liquid alternatives in these type of environments. But having said that, the beauty of it is, and look, we've closed a couple of investment rounds since COVID, and not huge ones, but there is still money there, and it's actually kind of, when you look at the investments, and you're not going to get a return for 5 or 7 years, you don't have to think in that kind of, oh, hang on a minute, I'm going to lose 20% today, or I'm up by 20%. it's very much a sort of patient, considered decision that's actually quite relaxing compared to some of the other alternatives at the minute. All the same principles and a certain amount of value and rigor is going to apply. And if you go into that thinking it's not going to be harder, then you're being unrealistic. My crystal ball tells me that wheel will turn, and particularly in an environment where there's really no return on cash at bank, and even commercial bonds. I mean, I've seen a few issued at 2%, thereabouts. There's sort of nothing out there in terms of getting any kind of return on savings or wealth. So that'll percolate into an appetite for risk at some point. You'd have to think, even if we have more problems and over a sustained period of time. So, but being ready for that audience, things like, you did your R&D grant, you are aware of ESIC, and you've ruled yourself in or out. You've had a good dig at all the grants, whether it's AC grants or the BDF up in Queensland, or Ignite New South Wales, or these. They're filters as much as they are money. If you get prepared and successful in those challenging circumstances, then you go to an investor or a group of investors as a vetted prospect. They're still going to be looking for reasons to knock you back, but you've got a much better chance. And it may be them that are actually feeling like, oh, hang on a minute, I'm going to miss out on a good one. It's very much a dynamic situation. And which absolutely will not suit everyone, but hopefully there's a few bits and bobs in there. And look, if all else fails, my tip is, and you decide that's it, pulling up stumps, go and get a job in government.
Yeah, I've been thinking that of late.
Because the pay rises keep on coming. The hours are not bad, and look, there's a retirement check at the end of it. So
yes, and there's no need to worry about JobKeeper or JobSeeker or anything, is there?
Oh, you're probably adminning it. So yeah.
Yes, it makes you wonder some days, doesn't it? But I suppose we've got to be grateful that the Treasury Department and the Tax Office and other people did get their act together. There's been some criticism, of course, from the professional bodies and a lot of individual accountants about the changes that were made and how long they took. But there's been a massive effort go on to get some sort of finance back into the community. So it's it's what comes after all that, I suppose. It's going to be one of the issues, and what the challenges are going to be once the temporary amendments that were made to the Corporations Act are removed. And I haven't seen anywhere, I don't know whether you've heard, whether they still end at the end of September. The prohibition against action against directors for insolvent trading, for argument's sake, or the banks basically not taking any action. Does that mean October is going to be a lively month for insolvency practitioners?
Yeah, well, I think there's some a broad range of measures that have potential to have a big negative impact. But equally, I'm a bit of an optimist in the sort of cause and effect. So when the issue rises to the fore, it'll get kicked down the road a bit, or it'll be modified to a certain degree. And I'm seeing a lot of that playing out. But it's happening in the context of some efficiency that I've kind of never seen, almost, particularly just focusing on the sort of startup investment, seeing companies that have previously got a cash burn of $3.5-4 million a year, somehow managing on $300,000, and actually releasing product faster and hitting new markets and distribution, and signing new deals.
Well, that's a great sign, isn't it?
Yeah, and look, I mean, that's driving some huge value. And you know, it's not the norm, but this is what I'm saying. I think there's opportunities for businesses that are really looking at the strategic positioning of their market, and you know, there's a big advantage for the ones that have already kind of built in that direction for a period of time, and then, you know, it's kind of landed in their lap a little bit. But and that's not to say they're necessarily across the line, but it does put them in a position to really slingshot out of that kind of hard times into some great growth and exit opportunities as well. So you know, that's definitely not everyone. But you know, even in retail land, or you know, pubs and clubs and that sort of thing, you know, there's trends where, you know, landlords going to turnover-based rental agreements post-COVID. You know, makes a lot of sense. A bit more a partnering type of arrangement. Things like that, where getting back to the business, the new business, or the new normal business, and staying positive, and recognizing that, hey, you know, we might be in a bit of trouble, but we've got you know, a lot of core skills, and, you know, at the end of the day, people are still going to eat out, or they're going to want to go to the pub one day, right, or the cinema, or whatever it is. You know, being in that position to take advantage of the new changes, and recognizing, you know, some of the upside. You know, if people aren't flying overseas, they've got to spend their money at home. You know, and you know, if that was a big chunk of the discretionary spend, it's held back for a while, but it really could change the dynamic. And in a lot of places where, you know, there really isn't a lot, you know, you can't expand the local tourism industry overnight. So hanging in there, and being prepared for kind of a bit more downside, but plenty of upside is probably the message that I'd give.
Okay, thank you, Matt. If we've, hopefully we do have, when this video is watched by people, we have some people watching it who have developed a product, process, or service, or a business that have been thinking about trying to raise capital. What would your comments be to them at this stage? If they thought they were just about ready to go and try to raise some money, should they, or should they wait, or what should they do?
Look, I'm getting this sort of throughout the period, because there's people who launched just before this, and then they've kind of had a bit of a false start, or you know, they're in the process of, you know, going through a Series B or something. So there's been quite a few different case studies throughout for me. My general or generic commentary is, unless COVID directly benefits your business, then you want to be kind of responding similarly to other businesses in terms of cutting back and kind of tightening the belt. Even if you've got the growth story and the technology edge, or some sort of special sauce to the model, just purely because the next time you cop a dilute, that'll be a bigger dilute at the moment. So I've got it on the other side, where I've got investors kind of coming to me going, you know, we're expecting to find some bargains here, Matt. Let us know when you find some bargains. And that's really me being a bit more advocate of the issuers than the investor community. That said, there is an argument to taking a little bit of vulture money, and provided you can use that vulture money to knock on. So if you were to take on a big Series A to acquire a competitor, or to build out the model at a extremely rapid growth, with a view to sort of maybe a market listing, you know, great idea. But right now it's still tough going, unless you're COVID beneficiary, you know. So there's actually a business in my building which sells puzzles, and you can't get in and out of it. It's just, you know, the Australia Post is bringing extra trucks to load this guy's stuff. So, you know, there are businesses in a peculiar kind of ways that are actually really taking off. There's a few that I know who are raising, and they're raising on genuinely good stories. A dynamic where people might go and see, say, architects and get a design. Now they're kind of doing that more online, and there's a great company up your way in Queensland that called Superdraft that does that kind of stuff. They've seen really good growth through that process. Now, I'm not an investor, but it's not everyone who's getting kind of knocked around by this. One person's loss can be somebody else's gain.
Oh yeah.
And or it can be the kick in the backside to remind you of all those. Oh yeah, I actually need to get e-commerce embedded in my website. Well, geez, wish I took that action 18 months ago, because I'm going to be flying ahead. Look, one of the ones that I have got a bit of an interest in is called Omnify. They have a marketplace builder. They're like a platform for platforms, effectively, and it's just crazy good as an opportunity for people in that space, because you can get a free launch on the site, build out a marketplace, run it, put hundreds of thousands of dollars through it as an MVP, and then go. And that's probably that's a sort of a broader trend that I'm seeing, where you've got businesses that were previously, before COVID, saying, you know what, I'm going to build an app, come to you and say, look, we've got all these creds and a great document, but really not a lot of traction, because they need $250,000 for tech costs, plus another $1 million after things get going or something. And then that's on top of the family money and everything else that they've been putting through. You've got that as your prior conversation, versus the new normal, which is, hey, you know what? I can get on this free app, plug that into my mate's business that already works in this industry, and started very organically, and get actual traction, and then take that to investors, and keep a lot more of the quiche to myself, or a higher percentage of the company in my own name for subsequent fundraise and a better exit. And I think that's again a broader trend. Great supply of freelancers have been pushed out from all these changes. They're just and also jobs going there, and that just tells you, people are still willing to go for it. They're just sort of really taking those extra steps to be as efficient in the way that they kind of execute as possible. So.
Okay. Well, you've given us a very interesting overview of the industry. How are things generally in Sydney?
Oh, mate, we still get out of the house without, getting pulled up on the side of the road.
We're all lucky we're not in Victoria, aren't we?
My brother was saying that he got pulled over and asked what he was doing the other day, and he was actually happy about it, because he's been a big advocate for trying to do the right thing. So, but look, we're pretty quiet. I do the rule of thumb based on the traffic, because I sit on a pretty major road, or above a major road in the office, and how many streets back the cars are queued at the traffic lights gives me an indication of GDP locally, and it's kind of returned to normal, but for a short period of time around peak hour is what I would say. So the total volume's down, but the Matt Pinter kind of transurban measure indicates that there's still a lot of people at home, and certainly the CBD proper is kind of flat is a generous way of calling it. But urban, suburban, sort of getting a bit of benefit there. People working from home, therefore eating at the local cafe, more in the suburbs. So there's a bit of swing around about. But the one thing which is really interesting is the property market. I think just hanging in there, and that probably is a bit of an outlier for my predictions. Not that I'm going to give you a forecast on that, but I've got a concern around deferred rents, particularly, and the commercial sector. It's very hard to pay back 9 months worth of half rent for a business that was, struggling through those 9 months. So,
Yes.
It'd be interesting if there's a bit of repricing in that area. But anyway.
Yes, we've still got a lot of challenges in front of us, haven't we?
Yeah, absolutely. Although you look, in February I predicted an Aussie dollar with an 8 in front of it. I'm almost right already. That was supposed to be by the end of the year. So, the mining money that we have in this country is pretty attractive as a safe haven. So, with exports up and China still buying, maybe they aren't our best friends at the moment, but still buying. We've got a bit of natural insulation and in the back pocket, or back paddock, I should say.
Yeah, that's right. Okay then, Matt. Well, thanks very much for joining us today. I know you're a busy man, and we'll talk to you again later on.
I appreciate it. I'll look forward to talking a bit more about crowdfunding next time. But right now, we're doing everything's been wholesale lately. So
okay,
which you've been enjoying. But look, have a great session on all your other interviews, and hopefully you can remind me whether I was right or wrong on that AUD prediction.
Yes, I will.
On the chat.
Okay. Thanks very much. Goodbye.
See you.
Thank you. I now want to turn to the next item. So thank you very much to Matt Pinter from Sydney, the Managing Director of Billfolder, and also the Chair of the Crowdfunding Institute of Australia. What we want to now move on to is a overview of an interesting conversation, I think, for SMEs. Should you be upgrading your accountant to Chief Financial Officer status? As I've looked at the business community over the last 4 or 5 months, I've noticed, and I'm sure every one of our viewers has noticed, that there's been a change in the relationship between what accountants have been doing for SMEs to what they previously did. Traditionally, accountants have had this role in Australia of preparing financial accounts and income tax returns. But what we've seen lately is the forms that are required for JobKeeper. And you heard Matt just refer then to the situation that some people have been late in lodging their forms required to continue to receive JobKeeper. And hopefully our SMEs who are watching this video will have been lodging theirs or commissioning your accountants to lodge them. And part of that will be, of course, whether you're going to be able to continue to draw on JobKeeper from the end of September onwards, because there's been some significant changes. The headline act was that the JobKeeper payment was going to be reduced from $1,500 per fortnight per eligible employee as at the 1st of March 2020. And that there was to be a further reduction in the payments from the beginning of January 2021. But the other significant change was that to continue to be able to access the JobKeeper scheme, the business had to be able to show at least a 30% reduction in turnover in the June 2020 quarter as compared to the June 2019 quarter. So have you done your calculations yet? And have you established whether your performance in the June quarter 2020 will enable you to possibly continue with JobKeeper from 1 October? You then also have to be able to show that in the September quarter, you've also had a reduction of at least 30%. So that reduction has got to occur in both quarters. And Many of you will undoubtedly need assistance from your accountants in preparing those calculations, and for the accountants to prepare an appropriate statement that I got no doubt is going to have to be submitted to the Australian Taxation Office. So these are the sort of things we're talking about. Because if you wish to avail yourself of the opportunity of applying for a loan at present from a bank or a government grant application, you are basically being asked to submit items such as business plans, budgets, and cash flow forecasts, and you need your accountant to do that. So it's within that context that I want to talk to you about making this arrangement permanent with your accountant so that your accountant can become your virtual chief financial officer. So let's just move through that if we can. I've already said that. And have you thought about any of this for your business? Accountants have wide training. At university, they cover a whole range of subjects as they do to their degrees, and then they join professional firms or go into industry or commerce, and they undertake additional training to become members of the Institute of Chartered Accountants or the CPAs, the so-called professional years. And many accountants are happy, and I'm talking now about accountants in public practice, they are happy to undertake more than just taxation work, and many of them already do. They also undertake financial planning, they obviously undertake audits and insolvency work. So accountants are quite used to having the skills themselves or within their team that a particular partner or team member has specialized in other areas. Now, big businesses have full-time accountants. They have a classification like a chief financial officer. I was one of those once, so I've seen how all this works from a large corporation listed on the stock exchange. And then there's a company secretary. Sometimes those two figures are bracketed together. That was the situation that I was in. There can be head office accountants, and there can be regional office accountants. But most of these people do very little tax return work. Sure, there's a tax return gets prepared. Sometimes the bulk of the preparation of that tax return is outsourced to an external firm of accountants. But in the main, these in-house accountants are supplying a range of services to help their businesses survive. So let's look at some of the key roles. And you might be able to identify as an SME operator that you have the same issues. And I suspect you do. Just that they mightn't be as big or as many of them. But when you compare yourself to the CEO of a listed public company, that person has a whole army of in-house experts. And I've shown you some of the classifications of accountants that a bigger company could have. And these people are able to supply answers. And the first thing that I wanted to bring up is the what if questions. I found when I was in that role as a CFO in a public company that 2 to 3 to 4 hours a day, and some days all day, could be spent answering the what if questions. Pete, could we do it this way? Could we change this? Could we do this? Which required costing exercises to be prepared, required some real analysis. The what if questions. And some of them led to new products or services being developed. Some of them led to acquiring competitors, businesses. Preparing accounting records so that the leadership team can use them. I think this is a vital part of this role, that you need to make sure that the financial records that are coming back to your business are not returns that have been submitted for the taxation office, but they're information which will help you and your colleagues in the leadership team be able to better manage the businesses. There's a need to safeguard the companies or businesses' assets through systems. And we're going to talk about a couple of those shortly. In most bigger companies, the CFO is the financial spokesman. That could be beneficial for you, especially in representations to banks and government agencies. I think it's important that you have your accountant so that they know enough about your business, not just the taxation side of it, know enough about your business that you're confident that they can be involved in briefings to your leadership team and to your board of directors if you have one, or your board of advice, which hopefully you do have, to be able to give financial briefings about how the business is performing, not just what its taxation liabilities are going to be. It's very important that the profit and loss accounts that are being prepared monthly and then annually are prepared for individual business units that you are operating, not put into one profit and loss account. That can be done to go to the tax office, or if you're a public company, in what is ultimately reported to shareholders in the stock exchange. But businesses should be insisting on receiving individual P&L accounts. So if you've got a number of stores, a profit and loss account for each store. But if you've got different departments like a factory, a warehouse, an office, a number of retail outlets, you should be receiving individual profit and loss accounts for each of those activities and key performance indicators for each of them. That means something, that the team's been trained how to react to those reports. And this would be a training session for the leadership team, use of key performance indicators, so they understand them. Liaising with the sales department to ensure that new customers have received the retention of title agreement and the terms of trade agreement, that they have signed off on those and they have returned them promptly, so that if management has decided that the company is going to be proactive in registering customers on the personal property securities register, that you have got sufficient time to do that, because the timing requirements under the legislation are very tight. That could be a role that your accountant looks at fulfilling. Modern businesses, big companies, prepare weekly performance reports for every business unit that they have. Major departmental stores break their business down into departments, whether it's 30, 40, 50 departments within a store, and prepare separate reports with their financial transactions, their gross profit, the direct labour costs and overhead costs, so they can receive a report showing the profitability. Are you receiving that? And wouldn't you like to get that? You don't have to wait to the 30th of June each year to know how your business has gone. You should basically be getting information at least weekly, which tells you how you're going. In some instances, businesses actually record this information for daily analysis. Supervising your debtor system to make sure that you're not taking on someone else's problem when you accept a new client, customer, but also being very careful to monitor debtors' days outstanding and do everything to reduce debtors' days outstanding. Now you, if you're the owner of the business or the CEO or the sales manager or director, you probably haven't got time to be worrying about these things, but this is a role that your accountant can perform for you, because the management of debtors is very important. The same thing applies to the investment in inventory, in stock. Businesses can get into all sorts of trouble by over-investing in stock. I think businesses should be adopting the just-in-time formula as far as possible on purchasing of stock. Your accountant could assist you to do that. Work in progress, if you're a tradie business or a professional firm, you'll have this cost component called work in progress. That should be minimized and should be monitored, and that's a job I think your accountant should be doing. Budgets are very important. You heard Matt just a short while ago refer to cash flow budgets as being something that a lot of businesses don't do. Well, the budgeting process, I think, starts with the budgets, and then it goes on into the cash flow forecasts. And this should be a consultation by the accountant with the individual leaders of the various units within your business, not just taking last year's figure and deducting 3%, or 4% or some figure, which might be the way things go this year, hopefully not, or even adding a percentage for next year, but looking at the units and doing the calculations as to what might be able to be achieved, and then incorporating those figures into the budget and tracking the cash flow position daily and weekly, monitoring it is very important, and a very important role for the accountant. The preparation of cash flow forecasts that Matt just referred to. Now, I never indicated to you, but Matt Pinder is also an accountant. He's a practitioner in Sydney, but he also runs a crowdsourced funding, equity raising intermediary business. And he was indicating that only some businesses have got cash flow budgets prepared. I think it's very important. But it's a onerous task if you're busy running all aspects of your business. So again, it's the role that your virtual CFO accountant could attend to and give you those reports. But it's no use doing budgets and cash flow forecasts and projected balance sheets unless you periodically review how you're going. And I think that should be monthly, at the most quarterly. Analyze the budget versus the actual, find out why there were variations. In some cases, the budget estimates would be wrong. In others, there's been a problem, and problems need to be fixed. That's the leadership team's role, to fix the problems, to make sure that those problems do not occur again. And your accountant can assist you in that. And obviously monitoring the overall financial position. There's all sorts of figures, isn't there? And I know a lot of you don't really understand what's contained in a balance sheet, and you get very critical that it's based on historical records. You've got buildings in there that your business bought 20 years ago, or your grandfather bought 70 years ago, that are still in there at their original cost. It's all a bit strange, isn't it? So you need your accountant to be able to explain that, prepare a statement of net worth, which brings things in at current values, so you can get the right slant on where you're actually at. And you've got to protect the company's assets. And this can be things like the insurance covers. Liaising with banks is an important role that your accountant can assist you with. And looking at funding the business. We were talking to Matt today on crowdsourced funding, and obviously what he's saying, he thinks it's too difficult to be raising money under the crowdsourced funding banner at present. Things need to settle down a bit. But your accountant should be working with the leadership team all the time to determine what might be needed and what funding might be able to be sought, whether it's going to be a crowdsourced funding, equity raising, or a Section 708 of the Corporations Act raising. Monitoring of government grants. There's a whole range of government grants out there, and some have been specifically introduced because of COVID-19. Can your business apply for them? One of the key functions, I think, for your accountant, though, is to act as the project manager of a business review meeting, which I would ask you to really consider holding once a month, that your leadership team attends. And it's not to discuss taxation issues. It's to discuss the financial performance of the business. Or not even the financial performance, that's part of it. It's the overall business. How's everything going? What are the customers saying to us? What's their feedback? How much are they buying? What aren't they buying? What's going on with suppliers? Can you receive the goods that you need? Or should you be looking at appointing another supplier in another country? How's the team going? Is there more team training needed? It's a vital meeting that should be held each month. And in many businesses, the accountant is the coordinator of those meetings, produces or coordinates the production of the reports. One subject that I've got very strong views on is that people strike budgets and they say, yeah, our sales are going to be $4 million or 150,000 a month or whatever. and we think our gross profit percentage will be 48% or 52% or 38%, doesn't matter. They put a figure in, and they go off and do all their calculations, and they see that they're going to achieve a bottom line of $230,000 profit or whatever the figure might be. And they sit back and say, well, that's not a bad result. The problem is, within a retail business, as those of you who are running retail know, you've got all different types of products, and they've all got different markups that the market will bear. You know, some things you can mark up 200%. Other things you can only mark up 60%. Now, if you, for some reason, start selling basically all your sales of those items that you're only marking up at 60%, I suggest you're going to have to sell a lot of them if you're going to generate the profit that you've produced in your budget. So that's one of the real reasons you need to go through and have that analysed. Your accountant can do that for you. And if you're a tradie business or a manufacturing business, it's just as big a headache, because someone struck a figure and said, okay, we should achieve a turnover for the year of $3 million, and our net profit will be $340,000. But if it needs a relationship with what is really happening. You've got a team of tradies who work for you. So what do they get paid? How many hours a year do they work? What is your productivity percentage that you're estimating for them? And it doesn't matter whether it's 90%, 80%, 65%. It's that figure then that is going to generate the income. What are you currently charging them out at? What are you doing with materials that you purchase in? What markup do you put on those materials? What are the business overhead costs? And when you calculate all that out on a series of spreadsheets in a budget, what's it show you the bottom line's going to be? Many people get a big mistake. It's not the $340,000 that they thought it might be. It might be zero or a very low figure, because there needs to be a correlation between what is happening in the real side of the business, the productivity figures, the markup on materials, the expenses, to make sure that your business is going to be able to achieve what you hope it can. And will give you a clue to be able to change things. So that's what I'm saying there. If you bring back these analysis, and the person to do that is your accountant. So that's the general matters that I wanted to bring to your attention. What do you think? Do you think you could ask your accountant to sit down and have a conversation with you to see which of those roles they could undertake? Now, I'm not suggesting you're going to need every one of those in your business, but I suggest you need some of them. And I suggest the best person you should be able to talk to is your accountant. Now, I know some of you are going to have accountants who only want to do income tax. They may have another person in their organization who can attend to this role for you, and they can still prepare your tax returns and be seen to be your accountant if that's what you wish. But if there's no one else that wants to be able to do this broader role, and you want to talk to someone and you can't find someone to talk to or don't know where to go, you could send me an email and I will give you a list of accountants that we have as our subscribers, because we've got accountants all over Australia subscribing to our system, and you can then have a conversation with them. COVID-19 news update. A reminder that JobKeeper is continuing, but you have to have suffered that 30% drop in turnover in the June quarter and again in the September quarter when compared to the same quarters or equivalent quarters in 2019. If you're a charity or not-for-profit, that reduction is 15%. I've said that. The coronavirus SME guarantee loans are going to increase to $1 million maximum loan from 1 October. The loan amount is going to go out to $1 million from $250,000. The loans can be for a period of 5 years instead of 3 years, and you have until the 30th of June 2021 to apply. The loans are still 50% guaranteed by the Australian government. So they're a very interesting loan. So what's your action plan? Have a discussion with your accountant and then develop your strategies for this new year. It's going to be a difficult year. That's what Matt was referring to. And we can assist you at ESS BIZTOOLS in a range of products to help you on this business journey. Why not visit our site and we'll be able to show that to you. Our next webinar is on Wednesday, the 5th of August at 12 noon AEST. Amanda Gascoigne, who's from the Hunter Valley, is going to talk about utilising your accountant to add value to your business. And Amanda will go into more detail than what I have today. And I'll be commenting on government grants that can assist you in your business. Matt referred to those, and they're very important. To register, please go to our website and click on to webinars. And for more information, you can go to esssmallbusiness.com.au and have a good look at the material that we have got available there for the benefit of small businesses. Or you can contact us. Give us a ring, 1-800-232-088. So stay safe. Think about upgrading what your accountant is doing for your business. If you need funding for your business, give consideration to crowdsource funding equity raising. Thank you for being with us today. Have a great day. Goodbye. I hope you all have a very good day. Thank you very much.